Welcome to The State of Us. Real people with honest opinions and the future of responsible media. Here's your host, Justin T. Weller.
Well, welcome, everybody, and thank you for tuning in. The next financial crisis, hopefully it caught your attention. The next financial crisis may be occurring in the oil industry. That's right. You've seen gas prices decreasing. You've heard the reports that oil production is up. So how could the next financial crisis be in the oil industry? Well, it's certainly something worth paying attention to. Hopefully, we've gotten your attention enough to realize that there's a serious problem. We'll lay it out for you and look at all the details and talk about what can be done. But of course, a complete, well-rounded conversation isn't possible without
your friendly redneck liberal, Lance Jackson.
I'm ready. This is a good one, folks.
It's gonna be.
They're always good.
That's But
this is a particularly good one.
Mm-hmm.
Well, because it doesn't sound exciting. I mean, who really wants to talk about financial falls?
Right.
You know what I'm saying? It's not an upbeat, feel good story, but at the same time, I think it's one that's going to affect people. But I don't want to control the opening, so I'll turn it back to you because I've got a good "why should you care" one.
So we'll lay out the three components that make up the perfect storm for the looming financial crisis of the oil industry. The information we're referencing comes from multiple sources, most of which were provided directly by the New York Times in the Sunday Review section on September 2nd and the Business and Finance section of the Wall Street Journal on Tuesday, September 11th. So that way you know where we're pulling a lot of this information from. So first up, there's three things. Number one, you've got a big increase in fracking. And you might be saying, I've heard about fracking a lot, but what the heck is fracking? Well, in simple terms, it's accomplished by injecting liquid at high pressure into a horizontal well below the surface. Mm-hmm. And what that does is basically release the oil in the surrounding area. They suck the water out, and then they can begin mining it. And it started about 10 years ago, and the common term is called fracking. The oil industry has a different name for it, but that's what it's kind of become known as. So some of fracking's biggest skeptics are on Wall Street, which leads us to the next point. So that's number one, is there's been a huge increase in fracking, which is actually pretty much the main reason that the U.S. is now third in the world in oil production by countries. Where, as you recall, just several years ago, that was not at all the case. So that's a big change. That's all pretty much in part thank you to fracking. Number two, the 60 largest fracking companies had negative 90 billion free-flowing cash per quarter between 2012 and 2017. Negative 90 billion per quarter. That's a lot of negative cash flow. A lot of negative cash flow. Number three, the end of oil's growth may be in the next 5 years, and that's based on two separate reports that were published and reported on by the Wall Street Journal in that September 11th edition. And why does it matter if it's in the next 5 years? Well, because the world's largest oil companies have predicted that it's 10 to 20 years away, not 5, and that's on average. Now, you know me, and Lance pointed this out before the show, I'm big on, well, what are most of them saying? Because the average doesn't mean most of them believe it's 10 to 20 years away. It means that, when you add it all up and divide it, that's what we figure out is the average. Well, the most occurring prediction was 2040 is when this is going to happen. And according to these reports, they're saying 2023 is what we're looking at pretty much. So a little bit of a discrepancy. Mm-hmm. And it's not to say that, we're giving all faith and credit to these reports and none to the oil companies. All we're saying is it's obvious that clearly somebody doesn't know, that
we really don't know.
Somebody's wrong, right? We know that. And that's kind of what the reason this article caught my attention, first in the New York Times piece, and then it was followed up in the Wall Street Journal, kind of with a different angle, were those three components. So you have huge increase in fracking, which has basically put us in the position we're in and made gas prices what they are. Number two is the 60 biggest fracking companies, negative 90 billion free flowing cash per quarter. And number three is the end of oil's growth may be in the next 5 years, which is 10 to 20 years sooner on average than most oil companies are predicting. And I don't think it takes an economist. I'm sure all of you who are listening to the show are more than intelligent enough to surmise that that sounds like a problem. You're pouring a bunch of money into an industry that hasn't demonstrated that it can make money, and that industry's demise maybe is, on the horizon. Whether it's 2040 or 2023, its demise is not that far away. So there's a problem. Now the question, Lance, is what do you make of this? I mean, how do our people out there understand why it's relevant to them? Why does it matter to you?
Well, one of the things that caught my eye is, where is all this support coming from? Where's all this financial support coming from? And it's coming from Wall Street. And one of the biggest supporters of the fracking industry and of the energy sector are the managers of retirement funds, because they're under pressure because of new state laws and federal laws saying that they have to have so much money on hand. Their fund has to be financed. And so they're looking for high returns for the short term so that they can meet their legal demands to make sure that they have enough money on hand. So they're investing. And that's where a lot of this money is coming from, so they're playing with our retirement. So that's, hey, if you are receiving retirement from something
like Lance,
or are expecting to receive retirement from something in the near future, the next 5 to 15 years could be very interesting, in quotation marks, as to how well funded your retirement plan is going to be if this comes to fruition, like many people think it's going to. Because as we let Justin get into the article, fracking would not be taking place if there weren't Wall Street funds and banking funds being made available to the oil industry to frack. Yeah. Because they're losing money.
Right.
And so
they can't sustain themselves.
We have for you old timers, we have an Enron-esque type shell game being played here by the fracking companies, being that they are taking new investment money and paying off old loans because they are not making enough money off the oil that they are producing from their fracking. If that makes sense. I mean, I'm trying to explain that in the way that I understood it. And that shell game is what led to the .com bust, and the housing bust and everything else. And here we are, people talking about, the 10-year anniversary of the government buyout back in 2008 and 2009 of the banks and everything else. And here we are in the same situation, but it's not .coms. It's not housing. It's fracking. Same situation.
The New York Times piece reinforces Lance's point when it says private equity titans have made fortunes by but not necessarily because the companies they fund have produced profits. And that's, I think, where that was kind of the thing that initially came to my mind of, wait a minute, if they're losing this much money, why is Wall Street funding them? And that's because what they've been doing is making money by generating some of their returns through selling one company to another or taking a company that they initially funded public. For a long time, public markets have been valuing fracking companies not based on a multiple of profits, which is the standard way of valuing a company, but rather according to a multiple of the acreage a company owns. As long as companies are able to sell stock to the public or sell themselves to companies that are already public, everyone in the chain, from the private equity funders to the executives, can continue making money. It's all a bit reminiscent of the dot-com bubble of the late 1990s, when internet companies were valued on the number of eyeballs they attracted, not on the profits they were likely to make. As long as investors are willing to believe that profits were coming, it all worked until it didn't.
Mm-hmm.
You would think we could learn, but I guess, Lance, I'd like for you to tell me if there's a way that you see that this doesn't collapse in a, awfulness, if something doesn't change. I mean, obviously we're going to do what we always do, which is talk about how we could shift it around, but I don't see a way that they get lucky, because it is all about, right? I mean, these people that are investing the money, it's like the dot-com bubble. It's like the housing market. It's people in high finance who know that they're abusing and using the system because they can make money doing it, and that the government, or
and they're
somebody else in the
driving
industry,
up stock prices,
right, will be there to save them.
Right.
If it all comes crashing down, or they'll have made enough money and that it's not their company. They've just, they've invested in it. So they don't really care because they've already made back their money 2 or 3-fold.
Mm-hmm.
And so who cares if it goes under and takes down, most of an industry with it. So I don't know. I don't see a way.
But affecting the average person.
Yeah.
Because even though, and I think a lot of our listeners know that I have my own personal investments, but my retirement, my monthly paycheck is invested. And those are the people that are going to be harmed when this happens. Not if this happens, but when it happens. And I guess your question was, what can you do? Well, they need to start to divest. Obviously these money market people need to start divesting some of their profits from the fracking and put it somewhere else so that you don't hurt the average worker on the street who has unknowingly their money being invested in this. While I may be smart enough, well, hey, I'm not going to take my excess money and invest it in fracking. How much power do I have over the fund manager who's running my retirement plan, for the state of Ohio? And that's where the problem is that the rich people that you talked about, they're going to get theirs and run.
Or already have gotten it.
And what's going to happen is people are going to see their retirement funds cut. They're going to see maybe not insurance available or being paid for or subsidized as much as it is from, their health insurance because of their retirement plan that they've paid into for 30, 40, 50 years. This is what, and so the only way I know, that's the concern to me, because people are saying, well, what are we going to do to power things? Well, as we've talked about, and we're probably going to do a show on here, hopefully in the near future, about alternative fuel sources. There is solar, there is wind, and it's worked and is working very well in European countries right now. Mm-hmm. And the prices for creating all of this is going down. So there's really not going to be a fall off in energy because people are planning for the future and have set up the ability to do some of this so that the transition from coal, natural gas, and oil is going to be smoother than I think a lot of Americans think it's going to be. But the hard downfall is going to be all these people that have invested in this, either knowingly or in most parts unknowingly, through the hedge funds and the retirement funds.
The Wall Street Journal says, quote, demand for fossil fuels will peak around 2023 as increasingly cost competitive solar and wind are buoyed by supportive government policies to displace growth in oil, coal, and natural gas. I mean, we've known that these companies are growing. One of the big concerns is that, forget fracking for a moment, lots of these major fossil fuel companies have not invested the way they need to for those companies to survive in a post-oil era. It's not that all cars on the road in 2023 are going to be electric. That's not what we're saying. But the shift is happening. It's underway. It's going to happen. It's not a will the oil shift happen. At some point, there won't be any more oil. We won't, even if we develop new ways to get the oil that's even deeper, at some point, it'll all be gone because this stuff takes millions of years to create. So we have to have something else. We have several other options. And the government, our own government, and I'm a little more familiar with this than I was just a year or two ago when I seriously took a look at my parents' farm, how they could move to a fully solar powered operation. There's a lot of tax benefits in place for people who move to solar. Mm-hmm. It's you have to make up the upfront investment. We did the math, and the amount of money that the loan would cost per month was actually less than the total combined electric bills. So you would actually, now granted, you have to take on all that debt, so for some people, that's something that they're averse to, and that's fine. I mean, that's a different conversation. But if you're willing to do that, if financially somebody tells you can, there's a chance that you will actually pay less for gaining an asset than you will than when you send your check to the electric company every month, which just as a reminder, there's no value return for that. Right. You just pay them for a service and they render said service is the thinking. And that's just one example. Which
is why it's so hard. Those companies don't want to support any alternative fuel sources. But that means that's really, when you look at it long term, a bad business practice.
Yeah.
Because they're going to go out of business if they don't divest, if they don't go into other areas of power. And that's what you're trying to say too, I think. If I'm understanding you, my understanding is, excuse me very much. Oil companies are going to cease to exist if they don't start taking their profits and investing in something else rather than continuing to push lobbyists and legislators for better laws for the oil industry, which is what they've done over the past 30 years. Mm-hmm. I mean, I've been around long. I remember the fuel lines of the early 70s and going to 55 miles an hour because of the Arab oil embargo and the talk of we have to become energy independent. Well, oil has taken that argument and said, okay, now we have fracking, so we can produce more oil, so we're energy independent because we now are able to produce enough oil for ourselves. Well, that's not the energy independence we were talking about in the 70s. We're 45 years later, and we're having the same discussion. Now, we've had advances because we have some solar, we have some wind, we have some geothermal. We do have more of that in place now than we did 45 years ago. But how much closer could we be to achieving energy independence using those areas if the big oil companies had taken their profits over the last 45 years and invested in those as power sources? Instead of BP being oil, it's BP energy. And yes, they're still producing oil, but they're also investing in solar and they're also investing in geothermal. And so see, now I'm an energy company. I'm not an oil producing company. And that's what these companies need to do, is quit trying to figure out how to find more oil and get behind some of these quote alternative, which are going to be, I don't like that term because they're not going to be alternatives
right
in the near future. They're going to be the main sources of energy. So if I'm running these companies, that's what I would do, is I would say, okay, guys, we're going to start taking our profits, and instead of throwing it down the rabbit hole of fracking, which we're not going to make any money at doing, and start investing in wind farms, start investing in solar panels. And oh, wow, can you see all of that money being invested? What's going to happen to the cost? It's going to go way down, because the more money that's spent in an industry, the cheaper the industry can produce the items that are needed, because they're going to sell more of them. So they don't have to make a big, huge profit off of each sale of a solar panel or of a wind turbine or anything. They're going to sell so many of them, the cost is going to be cut dramatically.
You're probably sitting there wondering, if Lance and Justin can figure this out, surely the leaders of these oil companies must know. And if they know, why aren't they doing it? And we'll answer that in just a moment. But before we do, remember, the State of Us is here, and what we're trying to do on this program is look at those issues that the mainstream media is either not paying the right kind of attention to or not giving enough attention to. I'd probably say this is the latter, not giving enough attention to, because I really don't hear much in the way of coverage about it. So it's not necessarily that they're not doing it, not covering it correctly. It's that they're not covering it at all. And we're looking at this because it's a serious, near term for many people who are alive today. You'll be alive for this. And it's an avoidable financial crisis that we're aware right now, if something doesn't change, is very likely. So what TrueChat's doing as a network, which the State of Us is part of, its mission is to educate people by providing honest, open, and respectful conversations. And if you think that Lance and I aren't in line with that, you're welcome to email ethics@truechat.org. In fact, we encourage you to do so, because it's your job, the people's job, to keep the media accountable. And don't forget, we do want to know what you think, and you can engage with us at TrueChat.org on Twitter and Facebook. Let us know your thoughts. If you have alternative solutions, or if you've come up with maybe a different reason why things are happening the way they are, all of that's relevant to us. So definitely go on social media and let us know your thoughts. So the answer to the question that I posed before, as we talk about fracking and the next financial crisis is oil, at least most likely. Lance and Justin figured this out, and it's not like we've got, thousands of employees and research teams and research firms that we're paying to figure it out. So it's pretty unlikely that the CEOs of these companies don't know that this is the situation, right? They know. Mm-hmm. So why aren't they doing anything? And I think, Lance, because you said, if I was in charge of these companies, this is what I would do. Keep in mind the average age of a CEO. Most of them know that in 10 to 20 years, they will not be at that company anymore. And what's doing the best thing for the company, and this isn't just, big evil CEOs, this is just people in general. We've talked about this. We as human beings are averse to the difficult path. Doing what they need to do would mean losses. It would mean some bad quarters, some bad years, some hard transitions, some layoffs. That's what that would mean. And the CEO is going to look at that and say, nah, because I'm not going to be here to see the rewards of it, and what I'm going to be judged on is how I took care of the company while I was at the company.
Yeah.
Which is then how we end up with unfair blame getting put on people who step into a situation and then, there's a financial crash. Because really, that's not how, it's usually not the person who was there a year or two before it happened. It was the people that were there 10 years ago who knew darn well this was coming, but they knew they weren't going to be there.
Well, it's just like the last two economic bubbles when they burst. It had to do with CEOs trying to meet the demand to make enough profit so that their extra money kicked in. We promise you a bonus if you can make the company, i.e. the major stockholders, if you can make them 20% this year, we'll triple your bonus from $1 billion to $2 billion. I don't know what, but so I have to meet. So what's driving me is not a good business sense, but how do I get my bonus? Mm-hmm. And unfortunately, anytime companies start to look in the short-term gains and don't look at the longer haul is when they go bankrupt.
Yep.
I don't necessarily have a business degree, but I've studied history and the economy in the United States. And that's what always happens. I mean, number one, our capitalist economy is open to booms and busts. But one thing that accelerates a bust is when companies start thinking short term instead of long term. And
same thing with people.
True. Exactly. I mean, in your own finances, right? Well, I'm going to take this vacation because I deserve a vacation. Oh crap. I don't have any money to pay for heat this winter. Yeah. You didn't think long term. You were thinking short term, but that is what's driving this as well, because it's like, well, we have to keep the stock market going up. Well, in order to keep people invested in the stock market, you have to keep giving them returns on their money. Otherwise, because I'm that way. If the stock market's not making me money, I'm going to pull it out and buy a bank CD because it's safer and I'm making just as much money on it. But right now you're not. You're making 3 to 4 times the money in the stock market as you are in a CD. So that's what everybody's doing. Well, now the pressure is to keep people doing that instead of saying, hey, you know what? We need to slow this thing down now. We need to look at some other things. We need to put some money into R&D, some research and development here because we don't have a long range plan to make money. No, instead, we're going to create things, ideas like fracking, which aren't making money, but we're going to convince you that they'll make money in the future. So therefore you'll invest with us so we can continue to make the profits that I need to make so that I get my bonus at the end of the year. Mm-hmm. That's what's happening. And it's happened twice, people, since the 90s. I mean, how many, fool me once.
Yeah.
Fool me twice. Well, I don't know. This is the third time, folks.
Yeah.
I mean, the recipe is there. This isn't Chicken Little saying the sky is falling. Everything's in place. It's there. Now, it's still early enough. We still have anywhere between 5 and 20 years. They could still make some changes to soften the blow or for the blow not to happen.
That'd be the ideal situation.
But I don't know about you, but I'm not sure I'm going to bet on that happening.
No, probably not going to put a lot of money on that unless we see some significant changes. And that moves us into, you're sitting at home wondering, I get it, guys. You've explained it. I understand. It's coming. It's going to be bad. I'm not a CEO of an oil company. / I don't have millions of dollars or billions that I've invested in these. So what am I to do about it? I get it'll be bad for me, maybe not catastrophic for me. I get it'll be bad, but how am I going to do anything about this? And of course, that's a very fair question because we try to talk about issues and always make sure there's a way that you can do something if you feel like you should. I mean, if you disagree with us, then you should take to the comments and tell us why we're wrong, and absolutely do that, please, social media. But if you're on the boat of this is a problem, the recipe's there, it's going to happen, then I think you've got to look at, well, what can you do? And we'll see what Lance thinks, but my solution is, and it may sound, like I've heard this before, how does this really matter? You have to if you're already doing it, you have to keep doing it and increase, or if you're not doing it, you got to get on board. You have to be supportive of renewable energy forms and of things like recycling, because those things are part of what progress in industry. Business typically follows what people want or what they think people want. If they don't know that people don't want oil, then they're just going to keep making oil, because as long as you're buying it, somebody's going to try to provide it, until they can't. And then it's just like, well, I can't make it out of thin air. So, then it's just, you're stuck. But it's like saying you want a diamond, but you don't have the money to buy it. Or there are no diamonds to buy, right? I mean, that's probably the better analogy is I want a 24 karat diamond. Sir, there's no more diamonds in the world. Well, I want it. Well, okay. But even if I'm in the diamond business, I can't give you something that I don't have. Right. So I think that's the big thing that you as a consumer can do is continue to be very conscious of when you have the choice of the energy efficient option that you take it. If you live in an area like Lance and I do, and maybe you're in a more remote location, chances are you may have your power supplier might be a cooperative. If they are, check with them. Keep in mind, they're a lot different than traditional energy companies. And just an example that I'm aware of here locally, and you guys can look them up, Pioneer Rural Electric. They're a power cooperative. And if you go on their website, it's a little step, but they've taken a step. They've put in a solar generating energy plant, and this is by no means enough to power, even a tenth of their customers, but it's symbolic, at least in their trying to show that they're committed to other forms of energy. And they have it on the website so that you can pay a small fee and you can, basically what you're doing is leasing a solar panel from them. So you don't have to have it installed or anything, but the deal is you're leasing one of their panels at their facility and the cost benefit will be reflected on your bill. And some years, based on how the generation is, it'll save you money. And other years it may cost you money. But that's just a small example of it's not a big. Now, unfortunately, where Brett and I live, we don't have the option of being part of that program because we're provided through Dayton Power and Light, which is a for-profit energy company. So it's different. I don't know if they might have an option like that. I haven't looked enough, but see, there's an example. That's something I can do is I can take 5 minutes of my time to go on their website and see if there's something like that. The more people that do those things, the more it indicates to the energy suppliers that there's a demand, the more they communicate that to it communicates it to the energy suppliers who communicate it to the energy providers. Mm-hmm. I have that backwards. Sorry. Your provider communicates it to the supplier. There we go. Got it. So it's a trickle thing. I guess that's my thought. And sorry, Lance, I only gave you like 30 seconds to respond here, but
no,
if you've got something else, by all means.
After 5 minutes of coughing, no, I have 20 seconds now. Exactly. We have to do what we can do, and we all make choices during the day. And so if we make wiser energy choices, then that is a voice. And if enough of us take that option, then it makes a difference. But if most of us don't, well, that's too hard. It takes time. I don't care. What difference can one person make? If we take those attitudes, then nothing will change. So I totally agree with you that it has to start with each and every one of us. And especially if you have children, you can make a difference with them. I mean, my daughters are both grown, but we always recycled. Both my daughters now are living on their own. They both recycle. That was something easy to do at home. They were taught to do that. So if you make wise choices, and my youngest daughter just bought a washer and dryer, and she said, Dad, I bought the most energy efficient ones I could find. And I said, there you go. Okay, good for you. Why? Because that's one thing when she was little and we went to the store to buy stuff like that, that was something her mother and I looked at, and she saw that, and now she is patterning her life. I can't say that word. Choose a different word. So my time's up, but that's just it, is that if you have young people in the house, the decisions you make can change the future.
Yep. And it's the rate, you can't say, well, I'll wait for tomorrow, because again, as we've highlighted, it's coming, and it could be as soon as 5 years from now. We have to make our voices heard now, because if we expect them to take changes, they have to know that the people want them to change now. Because they can't do it overnight. You know, even as fast as they want to go, as much money as they have, they can't do it overnight. So they, even if the crash happens, they can't transition out of it overnight. It takes time because it takes money and effort and all that. So, think about how and what you can do. And of course, there's lots of resources out there. I mean, just Google, how can I be more energy efficient? You'll get, tons of sources of 10 things you can do that take less than 2 seconds a day per item for you to conserve energy, or to be more energy efficient in how you get energy. So, with that, always comment and engage with us at TrueChat.org on social media, Facebook and Twitter. You can listen to TrueChat podcasts on Spotify, Apple Podcasts, Stitcher, and more. So be sure to look to your podcast provider for where you can listen to TrueChat, and of course on the website, TrueChat.org. For the State of Us on TrueChat in Urbana, Ohio, I'm Justin T. Weller.
And I'm Lance Jackson.
Thank you very much for tuning in. We'll see you next time on The State of Us. Be the change.
Looking for responsible media? Listen on demand to politics, sports, and more with the TrueChat app or at TrueChat.org. Beyond the horizon, there is trustworthy media at TrueChat.